Okay, let's look at some different approaches to pricing. When you think about pricing, the things that managers are interested in is how much money do we have to make? Okay, what's our target profit? And how much are customers willing to pay? Okay, what's the ceiling on this? And are we a price setter or a price taker? And that's the new part for you here. There's a really nice illustration here, Exhibit 8.5, that gives you, the key differences between price takers and price setters. And you are a price taker if you've just got a product that is not unique, has no brand name, there's a lot of competition for it. Okay, and if that's the case, then you've got to use target costing. Okay, since you know how much you've got, you can only sell it for so much. Okay, then and you know how much money you need to make. So your cost has to be, the results of that. So your selling price plus selling price minus the desired profit has to be equal to your cost. Okay, now for price setters are unique. Okay, and you want to think about like a Rolls-Royce is a good example. They don't care what a Camry is selling for because they've got their own market and their own product. There's little competition in that market. Okay, so in this case, we can say, well, this is my cost, and this is how much money I make, therefore, this is what I'm going to sell it for. Okay, so make sure that you understand this, and the other thing I want you to focus on, to be careful about, is this target profit. Okay, make sure that you understand that. It isn't always just given to you as a number. You've got to know what the shareholders want, and then what their total assets are. So we're going to look at Garnier's data for the year, or Garnier, and then cost plus pricing and target costing. So here's their data, and it's not as bad as it looks, but we've got variable manufacturing costs, normal product costs here of $1.20 per unit, and then we've also got variable operating expenses. So for this analysis, we put operating expense in also, so that would be sales commission and freight out at 30 cents per unit. My total variable costs that I have to cover are $1.50 per unit. Okay, now fixed costs, fixed manufacturing overhead, again that's a product cost, $2 million, plus operating expenses. These are also costs that we have to cover, $1,250,000. So for a total fixed costs are $3,250,000. Then they've got some other information here. Units needed are 2.5 million. Our capacity is 2.6 million, so we're good there. Assets are $10 million. And the desired return on assets is 10%. Okay, they're giving you absorption costs per unit, $2 per unit. It doesn't matter. All right, we're not interested in it. So Garnier has a branded product, so they're going to use cost plus pricing in this first example. And we've got 2.5 million units. So here's variable manufacturing costs, $1.20 times 2,000,005. Variable operating expenses, 30 cents times 2,000,005. Fixed manufacturing costs, fixed operating expenses. My total cost across the value chain, remember, is $7 million. Now, this desired profit. We've got $10 million in assets, and the shareholders want 10%. Okay, or the owner of the company wants 10%, but that's what it's got to earn. So we need to earn $1 million. Okay, so what is that? That would be the amount of sales revenue that we'd have to get. We'd have to sell it for $8 million. If I divide that by the number of units, 2.5 million, then my cost plus price per unit is $3.20. Okay? Okay, now let's look at target costing. With target costing, the selling price is set by the market, so we've got to manage to that number. And if we take the given revenue, subtract the desired profit, we determine what our cost has to be, and we either engineer the product down to that number or whatever, but we've got to get down. So here's target costing. I've got revenue at market price is $2.5 million times the $3 selling price is $7.5 million. Less a desired profit, 10% times 10 million in assets. Make sure this sinks in. Okay, I've seen lots of exams where this just falls out of people's head. Is $1 million, so my target cost would be my selling price less the desired profit, or $6,000,005. Okay, our current costs are $7 million, so we've got to find $500,000 to cut out. Okay, and that's it.